Welcome to a new week here on the Retirement Quick Tips podcast. I'm your host, Ashley Micciche, co-owner of True North Retirement Advisors, a fee-only fiduciary financial advisory practice managing over $400 million in client assets. If you are 5 to 10 years, even 15 years on either side of retirement, and you care about that retirement decision, you recognize the importance of all of the multifaceted decisions that you're going to make at or around retirement, then you are wise to be listening to a podcast on retirement. And hopefully, in the daily quick tips that I provide to you each and every day, I'm going to help you along your retirement journey, help you make better decisions when it comes to your retirement. So the theme this week is I'm recapping the third quarter, and then we're going to look ahead to the fourth quarter. Now, I do this right around the close of every quarter. We send out performance reports to our client every quarter and provide some context to what's going on in the markets, what's going on in the economy, what's driving your investment portfolio up or down, what's behind that. We put together and we send out a commentary to go along with that. So I'll be kind of talking about some of the points of the commentary this week, highlighting some things that are going on in the economy, the stock markets, the bond markets. I'll talk a little bit about the election. And I was thinking about what I wanted to say this week and some of the things I wanted to talk about. And I was reminded that I made a bet. I think it was earlier this year, might have been last year, but I made a bet with my dad that the US economy would fall into a recession this year in 2024. I thought it was easy money. It was like a $5 bet, but I thought, you know what? With interest rates where they are, the highest they've been, inflation, pretty hard to lick that. We still have inflation that's sticking around. Prices are still elevated, at least if you compare them to where they were a few years ago. That's going to be the straw that breaks the economy's back, and we're going to slip into a recession. However, that has not happened. And as I'll talk about later this week, the economic momentum is still moving in the right direction, at least for now. Now, will we go into a recession eventually? Yes. Will it happen this year? Probably not. And I think that there's a good lesson to be learned there, especially if you're watching TV, you watch financial news, you watch people, whether they're talking about the markets or the economy or even politics, always be careful of people who speak as if they already know the future and it's a certainty of what's going to happen. I didn't know what was going to happen, but I thought it seems obvious that the economy just is going to crack and break under the pressure and we're going to go into a recession. Now, had I taken that theory and then applied that across the board and called up all my clients and said, let's liquidate everything. The sky is falling. We're going to put everything in CDs. We're going to sell all of your stocks, get out of the markets. We would have missed out on what has been a tremendous year of growth for the stock market. Bonds have done well in this environment. So I have been around long enough now to know that you don't need to put your money where your mouth is. It's good to have a pulse on what's going on in the economy, what's driving, because that should dictate some of the finer points with how you manage your investment portfolio. But you don't want to have big theories, big ideas, and then put everything behind that. So that's, I think, a good lesson to learn about the surprising place that, at least surprise as far as I'm concerned, the surprising place where we find ourselves with the stock market basically at all-time highs. Bonds are doing well. The economy is plugging along. And despite higher auto insurance rates, despite unaffordable housing, despite all these other things. Now, are there problems with the economy? Yes. Are the systemic problems with the economy that are going to take years to work out? Yes. Do we have a problem with the government spending deficit? Yes. So do we have a problem with the amount of debt that the economy has? Yes. Are there signs of cracks in the system as far as higher delinquencies on auto loans, credit cards, some interest rate and higher inflation causing a lot of very real pain for millions of Americans? Yes. Okay. So the economy is doing well in some areas. Fortunately, for if you have assets, if you own stocks, if you own a house, if you have a positive balance sheet where your debt doesn't outweigh your assets, then you're doing okay. And if you have a job still, which most Americans do, you're doing okay. Now, wage growth, real wage growth is problematic right now because inflation has basically wiped out any wage gains. And so people do not feel any better than they did a few years ago. That on top of unaffordable housing, insurance costs going crazy, auto, home, health insurance. I just got my new health insurance premium amount and I cried myself to sleep that night. There are some very real problems with the economy. So I don't want to just brush that aside. But when you look at the overarching metrics around labor markets, GDP, inflation, those are pointing to things are getting better versus getting worse. Okay, I've gone on a little bit long today, but I just kind of wanted to prime you for what I'm going to talk about this week, which is what's going on in the economy, what's going on in the stock and bond markets, and where I see opportunities right now. All right, that's it for today. Come on back tomorrow. I'm going to recap in detail what has happened in the third quarter of this year. That'll be a nice jumping off point for talking about more about the stock market and bond market specifically in the days to come. My name is Ashley Micciche, and this is the Retirement Quick Tips Podcast.